Hello everyone, my name is Shikha Malhotra from Department of Commerce. Today we will be talking about nationalization of banks and its impact. So before going ahead, it is important to know what nationalization means. So nationalization basically is an act wherein the transfer of public sector assets to be operated or owned by the state or central government happens. That means the central or the state government overtakes a private entity. That is what nationalization means. So, today we are talking about nationalization specifically in respect to the banks in India. So, in India, the banks were previously functioning as a private entity, and then later on, due to the act of nationalization, many of the Indian banks were nationalized. So, let's see how the entire process of nationalization happened in India. So, you would be surprised to know before 1948, RBI in itself was a private entity. After 1948, an act was passed, RBI Transfer of Public Ownership Act, and that was the act which led to the nationalization of the Reserve Bank of India. So, therefore, on January 1, 1949, RBI was nationalized after this act. Later on, State Bank of India was nationalized. So, earlier the name of State Bank of India was the Imperial Bank of India. So, in 1955, Imperial Bank of India was nationalized and given the name as State Bank of India. And later on, it was established under the State Bank of India Act 1955. And followed by that, 14 major banks were nationalized in the year 1969. So, that was a phase wherein our banks were becoming nationalized banks. Then after 1980, another 6 banks were nationalized by the government. So, the total number raised up to 20 number of banks which were nationalized. Then again in the year 1993, there was a merger between New Bank of India with the Punjab National Bank that led to one bank reduction in the nationalization of the bank. So, the total number of banks before 1993 were 20 and later on it became 19 in number. So, we can say around in the year 1980, 80% of the entire Indian banking sector was nationalized and was under the control of the government of India. But later on, after this nationalization, lot of debates started to happen that is nationalization good for our country? Is nationalization bad for our country? So, there were a lot of arguments taking in place. So, there was this committee which was formulated under the leadership of Mr. M. Narasimham, which was known as Narasimham Committee for the Banking Regulation Act 1949. So, this was the committee which amended the Banking Regulation Act and it became Banking Regulation Act 1993. And as per the suggestions of Narasimham Committee, more of the private sector banks should come into picture, which would kind of change the overall scenario of our country. So, let's see and understand what were the reasons behind the nationalization of the banks and what were the arguments which were against the nationalization of the banks. So, let's first quickly discuss the reasons. So, as you can see, there are a lot of reasons which have been listed, that is reduction of the monopoly practices, greater control by the Reserve Bank of India, reduced misuse of savings of general public, greater mobilization of deposits, advance loans to agriculture sector, greater stability of the banking structure and followed by balanced regional development. So, let's try to understand each of the reasons behind nationalization. So, first and foremost was reduction of monopoly practices. So, there was a time when many of the big businessmen had cordial relationships or great relationships with the private banks. So, these companies started to exploit the bank resources in such a way that the new businesses were not able to enter at all and the competition was kind of reducing. So, nationalization would have easily helped in preventing such monopolistic practices led by these private organizations or business houses. Next is balanced regional development. So, obviously, when we talk about private bank, So, the motive of any private bank is profit orientation, and these private banks kind of neglected the backward areas because of the poor business potential. There was lack of profit opportunities in these backward areas, and obviously the business potential was rare. So, in that case, these private sector banks tend to avoid going to these backward areas. So, nationalization would clearly have helped in achieving the balanced regional development, as we already know that government's aim is to focus on the regional development. So, therefore, because of the nationalization of the banks, one could have focused on removing regional disparities and focusing more on development of all the areas. Next is greater stability of the banking structure. So, that was very obvious that because of the nationalized bank, people were feeling more confident. The confidence of the general public rose, and when there is more confidence in the general public, there would be more deposits, because they feel that these nationalized banks could help in safety of their, they could keep the deposits in a safe manner. So, therefore, more of the development of the nationalized bank would lead to better banking structure. And how this would happen? Because of the confidence the public was showing in these nationalized banks. Next is advance loan to the agriculture sector. Again, a big problem with the private banks was that private bank was kind of failing in assisting the agriculture sector. Again, the reason being they didn't wanted to do the business in those sectors which might not bring them lot of profits. So, therefore, because of failing to assist the agriculture sector in many ways, a country like India, wherein more than half of the population is dependent on the agriculture sector, was facing a lot of problems. And simultaneously, if these banks were nationalized, so definitely better finance facilities and structure could be offered to the agriculture sector of India. As I already said, that the confidence of the general public was becoming higher in the nationalized banks. So, that goes to say there would be greater mobilization of the deposits. That means we will be trusting the bank with our money. So, we were sure that the bank would be keeping our money safe, and more of the deposits resulted in rapid branch expansion. And rapid branch expansion means, again, it is a cycle, more of the deposits, more of the branch expansions. So, that means there is a possibility to mobilize the savings towards rural areas or better investment avenues. Next is reduce misuse of savings of general public. So, it has been thought that these private banks were getting the deposits from the general public, and they could have misused these savings. By the word misuse, I mean to say they were not utilizing these savings in the priority sector of the country, rather than they were kind of misusing it. But we know when there would be public sector banks coming in picture, that means there would be national interest in the mind, and it would never be neglected. Next is greater control by the Reserve Bank of India. As we already know that it is really important for the Reserve Bank of India to maintain better controls of the bank. So, in developing country like India, there is a huge need for exercising credit controls and other kind of control over the banks. So, if the banks are under the direct control of government, it would become really easy for the Reserve Bank of India to monitor them in a better and efficient manner. So, these were few of the reasons that necessitated the nationalization of banks in India. But then simultaneously, there were a lot of people, or the government, or the recommendations were also made in order to curb the nationalization process. So, there were a lot of arguments against the nationalization. So, let's quickly discuss these arguments which were against the nationalization. So, here we will be talking about political purpose rather than for productive purpose. We will be discussing beginning of the state capitalism. We will be talking about scope for inefficiency. We will be talking about less attractive customer services, then secrecy of the customer accounts, followed by branch expansion and burden of compensation. So, let's quickly discuss all of these points. So, first is political purpose rather than for productive purpose. So it was felt that once the banks were nationalized, now therefore the government has a lot of power in hand. So there was a danger of using the financial resources for political purposes rather than for productive purposes. People have started to think that government would be using their money, their savings for different political purposes, but rather it should be focusing on the productive aspects. Next is scope of inefficiency. So some of the people were of the opinion that the nationalization of the banks would definitely lead to a level down in terms of inefficiency in the working of the banks, because there were a lot of government employees who were lacking some basic skills and qualities as compared to those of the private banks. So there was a problem or a doubt in mind that there would be kind of scope of inefficiency. And lot of corrupt practices might also happen. So the entire population was kind of the opinion that there might be chances of inefficiency. Next is less attractive customer service. So as I've told you that because of lack of responsibility among the government bank employees, inefficiency, corruption, it was leading to a lot of problems, and they were actually attaching very less importance to the customer service. They were not very customer oriented, and that was a very difficult problem. Next is secrecy of customer accounts. So there is always a fear in the minds of businessmen that the banks would be maintaining their details and information in a secret manner or not. So as we already know, whenever we open an account in the bank pledges to not reveal any kind of customer information. But still, because these banks were taken over by the government, so businessmen were in a fear that these accounts would be maintaining, these banks would be maintaining our secrecy or not. So therefore they were forced to withdraw their deposits and go to some private banks where they were feeling more safe, or to some foreign banks wherein lot of money after the nationalization was going from these government sector banks to private sector banks or foreign banks because of fear of secrecy. Next is branch expansion. So in previous slides, we have talked about how nationalization would lead to branch expansion. We discussed that more of the people were depositing their money, which would lead to more of the mobilization of the money and would increase the branches. But then this could definitely not be a good reason, because whether it's private bank or nationalization bank, they have to go by the principles and satisfy itself that if they are opening a new branch, is it economically viable or not, irrespective of the fact that more people trust them or do not trust them. So in other words, we can say branch expansion can be achieved by both private banks as well as after nationalization also, or without nationalization also. So branch expansion cannot be a justifiable argument for making the banks nationalized. Next is burden of compensation. So these nationalizations were actually leading to the payment of heavy compensation to the shareholders. So that was giving additional financial burden on the government, and at the same time it also argued that nationalization was not bringing in much of the income to the government. One of the reasons for doing the nationalization was that the government was thinking a lot of income would be generated. Why? Because people were trusting these nationalized banks. So more of the deposit mobilization would happen and a lot of income would be generated by the government. But because of the burden of compensation, a lot of money was actually going out in the form of heavy salaries, heavy compensation and compensation to the shareholders. So therefore, government was actually not making much money as predicted because of the nationalization of the banks. So these were few of the points which stated the arguments in favor of the nationalization of the banks and arguments which were against the nationalization of the banks. And as we know the today's scenario, that more of the private sector banks have been coming into the picture, and one of the mandate which has been given by the RBI that no more new public sector banks or nationalized banks would be coming in the picture. Any bank which would now want to establish themselves have to be a private sector bank. No more public sector banks would be coming into picture. So that's all for today. Thank you so much.